Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 14th of February 2020. So, welcome everyone. Welcome to this Friday's morning session where we're going to have a quick look at the markets, a few of the charts, a few of the setups. But as always, before we jump into that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so also just before we jump in, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yeah, guys, feel free to visit us there, and I believe you can find a lot of useful information. Right, now then, let's jump into the charts. Now, the first one I want to touch on here is actually the German DAX. Now the German DAX here remained above this area here, the one that I was talking about a few days ago. Basically what I was mentioning, that if we see the index staying above this territory here, then there's and this territory is roughly between the 13,600 and the 13,640 territory. So if it stays above that, then there is a good chance for this one to drift back to the upside, which it did. And to be honest, but let's have a look at the cash index right now. We can see that there is a bit of a decline, but to be honest, not much. And actually, the price is balancing near the 13,760. So basically we are balancing near the high here, near the near DAX's all-time high, and this is going to be very interesting to watch if this actually can break above it and travel higher. So for now, probably, well, given the fact that it is actually slightly above it, if the index opens as it is right now, then yes, we will have a nice push higher here above this previous high near the 13,759 territory, and in a way this could increase the chances of a further drift north. So again, for now, guys, we are more bullish than bearish on this one. For us to consider the downside, and let me just drop this chart a little bit here. So in order for us to consider the downside, well, ideally we would like to see a break of this upside support line. This one has been running from around the low of August. And basically, although we did get a kind of a violation here, we are still keeping an eye on it, because if it drops lower and if we see a break of this upside line and a drop below the 13,445 territory, or even the 13,400, now this is where we will start considering lower areas. Until then, any kind of move lower here could still be seen as a temporary correction, because we are still above this upside line, and in a way, if this upside line holds again, we could see a nice round of buying. But for now, from this point in time, guys, all eyes are on this barrier, the 13,759. If we get a nice good opening above it, then, well, in a way we could see further move higher towards that 13,800 level that I was talking about in the beginning of this week. So nice, good, beautiful number. Don't get me wrong, we also we're not far from that psychological 14,000 level as well, but maybe this is a little bit too much for this week. So maybe if it wants to travel higher, then it could be for something for next week to watch out for. But again, for now, guys, all eyes are on this territory. If from the very short-term perspective, if this suddenly starts dropping below the 13,640 territory for today, we could consider a deeper correction here, a deeper move lower. Initially, we'll target the 13,600, and then we will aim for this upside line. But as from a more of a medium-term perspective, guys, a nice good drop below this territory here, then 13,445 could in a way open the path towards lower levels. This is from where we could consider the downside. Of course, there are some obstacles underneath here, but let's keep an eye on that one. For now, this is the area for us for the downside. But for now, we are more bullish than bearish on this one. Now, a slightly different story here on the FTSE. Now, given that the pound has accelerated yesterday, the FTSE took a dive. As we know, these tend to move in the opposite directions. But what I was mentioning yesterday in my videos, that if we see a drop below the 7,499 territory here, then yes, we could aim for lower levels. But of course, this is the area to watch, because as you can see, the index drifted towards the 7,428 territory. But it did overshoot it, but kind of still got held above it. Now, if we look at the cash index right now, we can see that the price is balancing near this 200 EMA here on the 4-hour chart. So that's roughly around the 7,455 territory, and the price right now on the cash index is slightly, just fractionally above it, but nevertheless still balancing around this 200 EMA. For us, we need to see a nice, good, strong move below the 7,428 zone. Ideally, we would like to see a 4-hour candle close in order to kind of consider a deeper move lower, a deeper correction at this point, because we don't forget that we are still above this upside support line taken from the low of the 3rd of October. In terms of the upside, we'll still stick to the same guns here and still remain, we'll consider the upside if we get a push above that 7,550 level that I've mentioned previously this week. You can see that on Wednesday we did get almost a test of this area, but the bears quickly stepped in and drove this one lower. So that's why we would like to see a push above the 7,550 territory first, ideally a 4-hour candle close above it before we could consider higher areas. Now then, gold. I've mentioned this one as well in my previous videos this week. Basically, we're neutral on this one for now, because as you can see, well, it's a clear picture why. It is kind of coiling up here. It's stuck between these two lines, between a short-term downside resistance line taken from the high of the 7th of January and a short-term upside support line taken from the low of around the 12th of December. So what we need here is, of course, a break, first of all. That's understandable, but let's say even then, just for that extra confirmation, in order, let's say, to consider the upside, we would like to see a push above the 1594 territory, which is the high of the 2nd of February, or in other words, the current highest point of February, and only then we will aim for higher levels, because this way the commodity would confirm a forthcoming higher high, and we could easily then target the highest point of January near the 1611, 1612 territory, roughly around there. In terms of the downside, if this upside line breaks, then and the rate, the price falls below the 1561 zone, roughly around here. Now, this is where we could start considering the downside. We will aim for the 200 EMA, then we will aim for the 1547 zone, but still, for us to get a little bit more comfortable with lower areas, a drop below this the current lowest point of February near the 15.47. That's what we would like to see in order to consider a deeper move lower. That said, with the downside, as you can see, we still have this upside support line taken from the low the 26th of November. So in a way, the downside might get limited near this upside line. So that's why this, if we would get this move lower below the 1547, we will aim only for now. We will aim only for a temporary correction. So again, this move lower could be just short-lived. Now then, WTI oil. Now, I mentioned this one in the beginning of this week, and basically what I was telling you, to keep a close eye on this little range that the commodity is currently trading in. So after we managed to break this steep downside resistance line taken from the high of the 7th of January, the commodity, the black liquid here, started moving sideways in consolidation form here. So basically you need to see a nice good pop above this 52.15 territory before we could examine slightly higher levels. Now we're not going to drag this one too much to the upside, but our initial target could be around here near the 54.35 zone, which is the high of the 29th of January, and also, as you can see, could perfectly coincide with the 200 EMA on the 4-hour chart. So that's why we're now we remain neutral, but yep, we need to see that break first above the 52.15 before considering a potential move higher. Now, in terms of the downside, if this drops below this 49.30 zone, which is the lower side of this little range, and this would confirm a forthcoming lower low, and the downtrend could resume, and we could see this one drifting further south. But for now, it's closer to the upper side, so let's keep an eye on the upper side of the range. So let's keep an eye on it in case this breaks and we see a nice push higher. So yeah, guys, for now, like I said, we are more neutral than anything else here on this one, but we're keeping a close eye on these two potential breakout points. AUDUSD. Now, very quickly on this. So I looked at this one for a while ago, and let me just adjust the downside line here. So basically, that's what's happening here. The pair continues to trade below this downside line, taken from the high of the 1st of January. For now, also, it's a bit of a tricky spot because the pair found good support around here, which is the lowest point of October, and the pair found support near the 0.6668 territory, from which it kind of rebounded and pushed higher, but it's still struggling with this downside line. So, well, pretty straightforward. Basically, in order for us to consider higher levels, we need to see a push not only above this downside line, but also a push above this barrier here, the high of the 5th of February. This way, the pair would confirm a forthcoming higher high. Of course, don't get me wrong, we do have the 200 EMA here, but in a way, if it acts, well, or should I say, if it doesn't do anything as it did here, for example, around mid-January, then to be honest, we could just ignore this 200 EMA. So because, as we can see, the pair does sometimes kind of respect it, but sometimes, to be honest, it totally doesn't. So that's why we're not going to focus on the 200 EMA too much. We're mainly going to focus on this 0.6775, 74 territory, and a nice good push above this could open the path towards higher levels. But for now, we cannot really do anything with this pair. We can just continue observing it. Of course, don't get me wrong. In a way, on one hand, as long as it remains below this downside line, there is still more likelihood for this one to drift lower. But in this particular scenario, given the fact that it has distanced itself from this key area of support near the 0.6668 zone, we would wait for a break below this before examining lower areas, because again, it might drift a little bit lower, it might not even test this area, and then kind of could reverse and push back to the upside. So that's why we will get a little bit more comfortable with lower areas if we get a drop below this territory near the 0.6668 zone. GBPCHF, very quickly on this. So here we have a nice move, which I've mentioned yesterday in my trader's tea time. So basically, what I was saying, that if we get a nice break and ideally a close, at least of a 4-hour candle above this, so we got our break and we got our close of a 4-hour candle, and you can see above this 1.2757 zone, and you can see that the pair now is trying to make its way higher. We are not going to drag this one too much to the upside. We're only going to aim for this 1.2854-55 territory, which is the high of the 31st of December, and then we'll take it from there, because in a way, if it holds, we could see a bit of a correction here to the downside. So that's why we're just gonna, for now, we're just gonna aim for this 1.2854 zone, and then we'll take it from there. In terms of the downside, now, for us to, of course, if this starts falling below the 1.2757 zone, we could, of course, be now a little bit more cautious. But in a way, if you want to consider the downside, in a way, you could keep an eye on this little target, the 1.2686. Now, here, for example, if we get it, this is the high of the 12th of February, and if we do get a drop below this little territory, this would also place the rate back below the 200 EMA, and maybe even below all of its EMAs here at the 21 and the 100 here. So then yes, we could target the downside, and maybe even we could target this lower area here near the 1.2525 zone, which is, as you can see, acted as a very good area of support. But again, before we could consider such a scenario, that we need to see a drop below this. So in a way, also, don't get me wrong, looking at our indicators here, oscillators, the RSI and the MACD here, you can see that the RSI is slightly on the overbought territory, but it's still pointing higher. So in a way, although we are still in this, we are above the 17 mark here, but the pair for now, the indicator for now, is pointing higher. So that's why there could be still a bit of a possibility to move to the upside. So yep, guys, for now, like I said, mainly focus on these levels that I've mentioned. Like I said, for now, if the target for us for the upside is the 1.2854, and for the downside, if we in order to consider a little bit of downside, a drop below the 1.2686 zone could do the trick for more sellers. EURGBP. So I've removed all the lines, just wanted to have a fresh start. So yesterday it did sell off sharply. So of course the weaker euro and the little burst in the little outburst in the pound that we had yesterday, of course it led to EURGBP sliding lower. As you can see, the pair is getting close to the 0.8276 territory, which is the lowest, or should I say, the lowest point of December. So in a way, for now, guys, what we're gonna do here is you can see that the pair is currently getting a hold up near this little territory right here, near the low of the 16th of December, and that's roughly around the 0.83 territory. So a nice good level here. If we get a drop below this, yes, we will aim for lower levels, but we will be very careful and very cautious near this lowest point of December 2019, and that's around the 0.8276. Of course, if it breaks that, wonderful for the bears, and we could see a forthcoming lower low getting confirmed. But given that we have already kind of had a sharp, steep drop, so even if it drops below the 0.83 territory, keep your eyes on this 0.8276, because if it holds, we could see a nice rebound here and a push back to the upside maybe. But again, of course, for now we're more bearish than bullish, but we're not excluding possibility to see a bit of correction at some point. But most likely after we could get a drop below the 0.83 territory here, and we could retest the 0.8276. And the last pair for the session is going to be the euro dollar, of course. And this is what I was talking about yesterday. So basically I had managed to reach our target again, and that's roughly around the 1.0839. I've talked about this one, and let me just show you what it was. Let me just actually jump into a daily chart on this one, basically. And then let me zoom in here a little bit. So this was the low of the 9th of May, if I'm not mistaken, or sorry, 11th of May, and this 1.0839 zone kind of acted as a good area of support, and it continues to act as a good area of support. We did get an overshoot here, but as you can see, the bulls are really fighting it hard and fighting it hard to push this one back above it. Of course, looking at this picture, I mean, this could continue drifting lower, especially if it falls below this 1.0839 zone again. And in a way, what we could target here is, and let me just quickly go back into history here a little bit. So basically that was the low of the 11th of May. So the next of 2017, by the way, the 11th of May 2017, and the next target for us could be around here. It could fill this little gap that we had here between the between April, between the 20th of April and the 24th of April. So and we could see a test maybe of the high of the 20th of April here near the and let me just near the 1.0777 zone. So very nice, a lot of sevens here, and could see a nice good test of that area. But we need to see a nice good further move below that 1.0839 zone. So you can see that the pair did try to move lower, but it is now trying to make its way back up here. Don't get me wrong, as long as it remains below this downside line taken from the high of the 2nd of February, we will continue targeting the downside. Now, with the upside, previously I've talked about this 1.0925 zone, but given that the pair has already moved deeper to the downside, so we can actually put our potential breakout point here towards the 1.0890 zone. So as you can see, previously it acted as a good area of support and also resistance. So in a way, this level here could come into handy for the bulls when considering some higher levels, and at the same time the pair would be above this downside line, and yep, we could start aiming for higher areas again, but this higher move could be short-lived because we're still below this downside resistance line taken from the high of the 31st of December. For now, although we are looking for a bit of maybe correction here, especially if it travels back above the 1.0846 territory. If it does, then we will aim for a bit of correction, but if it gets a hold up near this downside line again, another round of selling could be possible, where we will aim for that 1.0777 zone that I've mentioned previously. Okay guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my trader's tea time, as always, 14:15 GMT. For now, I hope you have a beautiful trading day, guys, and I will see you later at my trader's tea time, 14:15 GMT. Thank you very much, and bye-bye.